making moves, dropping knowledge every single day. Videos hitting 100K subscribers strong. Bitcoin level bullish vibes, we can't go wrong. Bullish vibes, we can't go wrong. Analyzing charts with precision, he's got the vision. Spotting trends, predicting games, making the right decision. Tom Brown in the bullish corner, he's the king. Educating the masses, bringing that crypto bling. Jerome Powell, Tom Brown on the scene. Crypto analysis, living the dream. Coin love, bullish all the way. Tom Brown in the house, let's make some gains today.
Never gets old. Never gets old. What's up, guys? Welcome back. Today we have a Chairman Powell coming in live from the Washington Forum. Don't let this dissuade you. Canadian economy speech. Now, it's not going to be, to my knowledge, only on Canada. It's going to be Chairman Powell talking about the U.S. economy, etc. It is not on FOMC, but it does not matter. Every time this man speaks, we get results, we get volatility. So you are tuned in to the OG, the creators of the Chairman Powell stream. Put a Chairman Powell in chat if you got it. He's going to be firing up here in just a little bit. I believe he's scheduled at 1:15. Now, here's the behind the scenes coolness. This is not exactly a public thing. It is public, but you had to sign up. And you better believe your boy signed up. So we got this. It's coming in 1:15. We got a little bit to burn. But then it's time, boys and girls. It's time. Let's switch to the real thing. I got the dollar, Bitcoin, and S&P 500 pulled up here. I threw up 𝐂𝐴lGo, our sponsor. Shout out to them. Up on them, just a little experiment to track them on the 1-minute chart. Do not get freaked out. It is the 1-minute chart. Take a breath. I know the last few weeks have been testing and not easy. It will get easier, but it also will get harder at some point. We got our classic charts pulled up. We only have a few minutes here. S&P, no surprise, did not have a great day yesterday. We saw it break down from what looked like a descending, whoa, over on this vertical stream, there we go, a descending parallel channel. There we go. And just plummet. I'm looking for a back test at this point of the previous all-time high, and that is quite a bit to drop. Let's take a look here on the week. Not looking so hot. 𝐂𝐴lGo giving us the change in trend signal and even a potential short opportunity. The previous all-time high sits at 4,700, 4,800, and you can also see over here on the week, that's basically where we found resistance. Back in December of last year before breaking higher, we took a little pit stop there to cement a little support below. Now, will S&P trade there? Will it continue falling? That's anybody's guess. Certainly today, during Chairman Powell's speech, we could get some insights as to where he sees the economy moving into the end of the year. Dovish, typically we look at as more bullish for crypto and risk assets. Hawkish, more bearish. We'll see what he has to say. The dollar has been on a massive ripper. Does not seem to be slowing down, but we do tend to see, as Chairman Powell speaks, markets move. And that's why we come, that's why we gather. Same time, same place every time. Right here. Up at 106.3, not quite higher than October's high of last year, but man, is it threatening it. Almost inverse to the S&P. We are getting the bullish signal here on 𝐂𝐴lGo, signals and overlays. Candles turning green. We're moving into our resistance. We don't even really need an indicator for this. We can just say, well, there's clearly some resistance here from the sell-off that we saw back in October. But the dollar has been moving just up, stocks just down, and unfortunately, or maybe fortunately, Bitcoin kind of caught in the middle. Still above or at previous all-time highs. I don't like what we're getting here. This seems to be following stocks on 𝐂𝐴lGo on the week at least. Getting that short signal, getting the change in trend. We have 5 days and 7 hours to go. That's too much time to count this candle closed yet. So don't make your bets based on this. But at the end of this week, if we don't close higher, we're going to have some nasty confirmations on the weekly time frame. Just something to keep an eye on, something to keep in the back of your mind while we enjoy this. Someone commented on Twitter. By the way, you can follow me on Twitter, twitter.com/TomCrown. Someone commented about, can we just watch cartoons after Chairman Powell's speech and just have a little community time? I sounded really nice. I know there's been a lot of chaos for you guys. The whole world kind of going in the shitter here, but things will get better, I promise you. Bitcoin does not care about what goes on in the world. It does have times where it's impacted by it in a short-term time frame, but the long term is unscathed. If you believed in Bitcoin a month ago, there's no reason to change your mind now. Things are going to be okay, I promise. This isn't even, honestly, like a 2-cent take here. This isn't even as intense as, say, March of 2020. This crash, this was a 60% crash. This was COVID. It was a scary time. It was the black swan. People are calling the conflict right now, or war going on, a black swan. Well, where's the sell-off? Didn't take this much time last time. To me, that is the market interpreting this as not as... I have to choose my words carefully here because I don't want to discount any pain. My heart and my prayers go out to everyone in the world who is suffering right now. Regardless, I don't wish that on anyone. But the market is saying this is not as bad. This is not the black swan that we've had in the past, at least so far. My bets are still that it is not the black swan like 4 years ago. The timing, very crazy, almost exactly 4 years. Something to think about, a little tinfoil hat time for you. And let's see. We're 8 minutes in. Nice. Not bad. Oop, hold up here. Got a little issue on my side. Will be fixed in like 30 seconds. Should be good. Check. Audio. Good. All right, we're good. Really? Don't let the energy die. We got it. I don't have Pickle. By the way, we all need to send our prayers, our good energy, and our thoughts to Pickle, our dearest friend here on this channel, my right-hand man. Just feeling a little under the weather. Not going to talk about his stuff. He can share when he gets back. He's okay. He's okay. Doing better. But I miss him. We miss him in this community. All right. Back into it. We got this. 6 minutes to go. Let's see who's here in the chat. We are live on TikTok, not Instagram, Facebook, Twitter, YouTube, Twitch, and probably other places I'm not really aware of. If you're watching, you want to tune in with the big crowd. We have hundreds, maybe even thousands, I haven't checked yet, viewing on the mainstream on YouTube. Jump on over here. YouTube.com/TomCrown. Also jump in the Discord, discord.gg/TomCrown. Good. Shill's out of the way. We got, almost 1,000. What's up, Moggs? I see you. Magnus Larson, my guy, casting spells of engagement. I appreciate it if we all could cast our own spells of engagement. The more you engage with the live stream, the more YouTube shows it to new people. And we need as many people as we can here tuning in the next 5 minutes when 𝐿𝐴 goes live. So I appreciate it. Engaging is liking, subscribing, chatting, sharing, voting in the poll, whatever it is. It's all good. Let's go, Autopilot. What's up, Bad Baptist, Mouse, Jennifer? How you doing, Jennifer? Pickle Rick? I'm Rick. I'm Pickle Rick. Rick and Morty. Skyforge, Foxy, I see you, man. Cy B, 1234, not spam. I don't give a crap. You can spam engage. Pickle's not here. The wrenches are sleeping quick. Nah, I'm just playing. Golden. What's up, Golden God? Good name. Let's go, Brandon. What's up, Walker, Mike, Emilio, what's up and run? Dude, so many names, so many people. Can we get, who's got the emojis? Put some 𝐿𝐴 emojis right in that chat there. Get a little 𝐿𝐴 going. Put your hands together and pray as well that Gina makes an appearance, though I have a feeling she won't. But you never know. What's up, Chill Your Mind? I see a fellow check marker over there. Top 1% of YouTube over here, right on. Downtrend detected. Bitcoin actually moving up, at least into this time frame, into this speech. Looks like hit its lowest point about an hour ago and has slowly climbed up. I wouldn't call this an uptrend on any significant time frame yet. Still very much in a downtrend, at least for now. What are we missing? We're missing a higher high. Prices falling, hitting lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Maybe. Maybe we're going up for a higher high here. Kick this low time frame downtrend on the 15. It's going to extend out to the 30, even the hour. Pretty intense selling pressure. It's weird because let me see the volume before I speak. Not a ton of volume. I got the volume candles up. That's why they look like they're on acid. Not a lot of volume. You see very thin candles. That's telling us low volume. We got some big volume on the sell-offs, but that kind of ended at 62,000. This bounce has been very weak, but something that is catching my eye in the low time frames, we'll be watching through the stream, is it does seem to be respecting these lows. Now, it is trending down, but with everything going on, with all the fear, right, with everything bad, you'd expect this to break quicker. Hasn't broken. I think that's a sign of strength. Possibly, though, just waiting on the dollar. The dollar trending pretty much sideways. Maybe looking for a higher high here as well, and maybe it's just waiting on that. I think we're going to see some volatility. So as always, guys, if you are trading, I don't recommend trading during these. But if you are trading, sign up with any of the partners in the video description below. Use my link. It helps support the channel. We don't shill stuff here. I don't take money to tell you guys to invest in some crap coin that rugs. It makes us different from most crypto channels. I know you're used to it, but we're never going to do it. It's not our thing. You're not the product here. But you can help support us by signing up with those links. You'll also get VIP access in the Discord. We got 2 minutes to go, boys. How many more minutes, Jay Connor? That'd be a big 2 minutes, my friend. What's up, people over on TikTok? She win. Powell speaks in 2 minutes. How much longer? 2 minutes. What's up, Craigton? Nicholas, bro, Shanny, Sleep Vibes, The Dad 2020, and a banana. What is this? This is going to be Fed Chairman Jerome Powell speaking live on inflation, interest rate, economy, and I guess we'll say foreign relations in some way. Amir, ICT or SMC, which is better? They're the same thing. What's up, Tech Dad? I see you over there, my friend. Coin Onia Trader Mikey, MA1 memes. What up? Lethargic. What's your expectations on inflation? We were talking about this before the stream started. Once the printer turns on, the printer does not ever turn off. Humans have proven this time and time again. Printers don't have off buttons. They have breaks. They have maybe a cooldown period. But man cannot be trusted with the printer. We have learned this from every civilization that has ever had a printer. Ooh, he's already talking about the data. That's not Chairman Powell. We're going to give it a minute. He should be live in just a few seconds here. You know, actually, I'll turn it back up.
A lot of the discussion about the U.S.-Canada relationship tends to focus on its importance for Canada. Trudeau the Elder's famous comment about sleeping with an elephant. But Canada is our largest export market. Almost 20% of everything that we in the United States send abroad into this world of 8 billion people goes to the 40 million people in Canada, who are only 1/2 of 1% of the world. It is the largest and most comprehensive two-way economic relationship. It's not all about Canada. Among any two countries in the world.
This is very true what he's saying for you guys who don't know. Canada is our largest trading partner. They're huge. It's very important.
Perhaps determined by decisions that our two energy producing nations make. We have a unique role in being advanced financial economies, using a lot of energy, but also significant energy producers. And can balance the effects on economy and society of the choices that we make. And on top of that, Canada is a key U.S. ally in the international financial architecture. I've spent 3 different tours of duty in government service, where a big chunk of my job was international financial diplomacy. And we could always count on the Canadians being sane, solid, and punching way above their weight. And yet the U.S. tends to take it for granted.
Watch it, buddy.
My experience in life is that the good things we take for granted, we tend to mess up. With this series of events, we can be part of helping focus folks in the United States on the importance to the U.S. of this relationship by finding speakers and topics that will have a very broad appeal beyond the usual suspects who focus on our relationship with Canada. And we certainly have that with our event today, which includes 3 of the most significant economic leaders of our two countries. Bill Murnau, our moderator today, is, well, when you look in Wikipedia under Renaissance Man, there is an inset photo of Bill Morneau, and
That's a
nobody
lie.
else. Recognizing his significant achievements across politics and policy and business and philanthropy, he's the former finance minister of Canada, playing a key role in shaping sustainable economic policies of the Trudeau administration, including Canada's economic
All right, they're coming up here. Volume check. Do I need to turn it up more? Just turn it up a little bit.
above weight punching into international diplomacy. As a business leader, he grew the multinational human resources firm Morneau Shepnell from a family business to over 4,000 employees and the largest human resources provider in Canada. As a philanthropist, he's worked to support the arts, help at-risk youth, improve access to health care and education all around the world, including founding a school for Somali and Sudanese girls in a UN refugee camp in Kenya. And as a policy thinker, in addition to his role chairing this Washington Forum, he's chaired the C.D. Howe Institute, a leading Canadian think tank, and has written Where to From Here, a policy book that it is several cuts above the typical former official's post-service book. I put it up there with Robert Rubin's In an Uncertain World. Anyone who has ever served in any government of any country at any level at any time will immediately recognize the honesty and intelligence and savvy that he's brought to thinking about the lessons of his time in office for the issues facing Canada. And all of us, I highly urge all of you to read it. Tiff Macklem is the governor of the Bank of Canada, and another of the reasons for Canada's substantial above-weight punching in the world. In addition to his role as governor, he's the chair of the group of governors and heads of bank supervision. That's the oversight body of the Basel Committee, rather high profile these days. And he is co-chair of the Financial Stability Board's regional consultative group for the Americas. He's a distinguished economist, having headed the most important division of the bank's economic staff in the early 2000s, having played a critical role in Canada's response to the great financial crisis in his post in the Canadian Finance Ministry in the mid-2000s. He's been a senior deputy governor of the bank from 2010 until his appointment as governor. He's also been a distinguished academic, having served as dean of the Rotman School of Management at the University of Toronto. And our final panelist is Jerome Powell, chair of the Board of Governors of the Federal Reserve System. It is a weird task to introduce Chair Powell. It's like introducing Henry Kissinger. How do you do it without looking absurd? His doctoral thesis on Metternich received very high marks. So just let me say this. There is an anteroom off the main boardroom in the Eccles building, which is the Fed's true headquarters building. They're currently slumming it in an annex, where the portraits of all the Fed's chairmen hang. And as you look around them, it is borne in on you that none of them will have been as consequential across as broad a range of matters as Jerome Hayden Powell in managing the remarkably low inflation and high employment of the pre-COVID period, in the world historical response to both nationally and globally to the COVID event, in the first major review and explanation of a formal monetary policy framework for the Fed, and in managing the quite effective response to the most significant inflation in almost half a century, but one in which many of the traditional guideposts could not be helpful, requiring very creative thinking and deft management of the extremely well-meaning but hydra-headed body that is the Federal Open Market Committee. So with that,
there we go.
Let me thank you again for coming, and let's turn to our intro.
Well, I want to start by thanking you, Randy, for that very, very generous set of introductions, and also for your willingness to step forward as the co-chair of the Washington Forum on the Canadian Economy. So we very much appreciate your esteemed leadership, and one of the key reasons we're here today is due to that. So really appreciate it. I'll just say personally, one of the things I liked most is you said Canadians were sane. So that's a pretty good starting point, I think, for our discussion here today. So with two esteemed panelists, I won't really be speaking much. I want to give both of you gentlemen an opportunity to talk a little bit about your respective economies, and I guess also recognize that we're here to talk about the Canada-U.S. relationship and what is both distinct and different about our economies, but also what we share. So maybe with that, I could start with you, Governor Macklem, and
start with Chair Powell.
Then we'll talk to Chair Powell.
Well, thanks, Bill, and I think you better call me Tiff. It is a pleasure to be here, and thank you and Randy for launching this, for inviting us both. I am very pleased to be here to say a few words about the Canadian experience, and I always enjoy comparing notes with Chairman Powell. Now, as Canadians, we invariably compare ourselves to Americans, and maybe it's human nature, but we tend to focus on the differences. We've got different systems
Yeah, I don't know. They're gonna do this little like intro crap. This will be good though. Once they actually let Chairman Powell speak.
We even have very colorful
jokes will be
polymer
bad.
banknotes. And certainly our climates, I think, are certainly the IMF meetings are always a welcome first blast of spring for the Canadians. Our economies obviously have much in common, but again, we often focus on the differences. If you look at growth in Canada and the United States over the 20 years leading up to COVID, remarkably, the average was exactly the same, average 2.2% in both countries. The sources of growth, though, have been a bit different. In Canada, we've grown more by adding workers. Our participation rate has risen more, and we've had proportionally higher rates of immigration. In the United States, adding workers has also been important, but increasing output per worker or productivity has made a relatively larger contribution. And I will admit in Canada, we look at US productivity growth with some envy. And we do ask ourselves, I mean, what can we learn from the US experience? We are concerned about productivity growth in our country. Turning to the financial system, we both have strong banking systems, but the structure of our banking systems is quite different. In the United States, you've got a lot more banks than we do in Canada. In Canada, we have 5 large national banks and a number of important regional players. The structure of our mortgage market is also somewhat different. In Canada, the typical mortgage is 5 years. In the US, typical mortgage has a term of 30 years. And our banks in Canada tend to hold mortgages on their balance sheets. US banks securitize a lot of their mortgages. Despite these differences, our systems are very integrated, and indeed, a number of large banks have large operations here in the United States.
You won't be able to tell.
Our pandemic responses were also mixes of similarities and differences. You know, broadly speaking, the paths of our two economies were pretty similar. We both cut interest rates very dramatically to effectively zero to support the economy through the pandemic. Then we both raised them very forcefully as inflation rose rapidly, and we've both seen inflation come a long way back. Growth has been more resilient in the United States, though, through this tightening cycle, and I think that's partly related to the stronger productivity growth I mentioned in the United States. And it may also be related to the fact that monetary policy may be having a bigger impact on households in Canada because of the different structure of our mortgage market. More of our mortgages have reset in Canada, so more people are feeling those higher interest rates. Yeah. And that has restrained household spending more in Canada. You know, in each of our countries, I do want to underline that, you know, we gear our policy decisions to our domestic monetary policy mandates. And in Canada, we have our own currency, we have a flexible exchange rate, so we can run our own monetary policy. So
good for you. Good for you. You are a country, Canada, yes.
We don't have to do what the Fed does. We can do what...
Let Chair Powell speak.
I do think, though, we're looking at the same thing.
Let Chair Powell speak.
The same questions. I think we both need to feel confident that we're clearly back on a path to 2% before it would be appropriate to reduce interest rates. Last week in Canada, we held our policy rate at 5%, where it's been since last summer. We did stress that we are encouraged by the recent progress.
Can't fast forward through live.
Inflation, and we want to see it sustained. And just this morning, Statistics Canada published the March CPI. As expected, headline inflation came in close to 3%. We have seen gas prices in both our countries move up. Importantly, though, measures of core inflation did tick down again, and that does suggest that underlying inflationary pressures are continuing to ease. So we continue to be moving in the right direction. The other thing I want to underline is that in the conduct of monetary policy, we do spend a lot of time looking and understanding what is going on in the United States. U.S. economy has a very big impact on the Canadian economy. We also watch the U.S. economy closely, particularly through the extraordinary period we've all been through in the last few years.
Extraordinary.
Because the more we understand what we have in common and our differences...
Dude, he was supposed to speak 10 minutes ago. Shut up. Oh my God.
Let me just close on a few
words
with
it, boys.
On just how integrated the Canadian-U.S. economy is. And Randy, you highlighted some of the key facts. I would totally share your perspective.
Does the volume need to go up? Their audio always sucks. I'll try.
the model for mutually beneficial open trade and investment. 77% of Canadian exports flow to the United States. And as you underlined, what less people know is that Canada is the United States' biggest export market. 17%, or as you said, almost 20% of U.S. goods head north to Canada.
Good.
If you look at foreign direct investment, there is a similar two-way dynamic. In 2022, more than half of Canadian FDI went to the United States by far the largest share of our FDI. That was roughly $43 billion. In the same year, $50 billion of U.S. FDI came to Canada. So it's a pretty balanced relationship. And I think what these numbers underline is just how close that economic relationship is and how it works in both directions. And the final thing I'll say is, when you look forward, we face many of the same structural challenges. Our labor forces are aging. There's going to be a big challenge with new technology, training, and making sure we have the skilled workers our economies needs. Climate change is affecting both our economies. We're both grappling with shifting trade and investment patterns globally. Supply chains across both our countries need to build more resilience. Conflicts internationally are increasing global uncertainty. And for all these reasons, I am very glad we're having this discussion. We do have much in common. And Randy, as you underlined, when we work together, we can get a lot more done. Thank you.
Thank you for being quiet. Thank you for getting off the stage. Go. Go.
That's a great place to start. Chairman Powell, really interested in hearing your perspective.
Thank
Another
God.
place to start
Let's
is to
go.
say, why don't you call me Jay and call Tiff?
Okay,
Tiff.
I know I do it behind the scenes. I'll do it in front of
Okay.
the scenes too.
Great. So let me start by thanking Randy and Bill and 𝐒𝐲 and Tiff for this. It's great to be here today. I want to echo what Randy said about the mutually beneficial, respectful, great relationship we have with Canada, economically, culturally, and I'd also like to echo, I thought Tiff did a great job talking about the similarities and differences in our economy, our financial markets, the challenges we face in our policy stance. It's almost as though you somehow had a copy of that part of my remarks, Tiff. So I'm not going to repeat that, but what I will do is talk, if I could, a little bit about the U.S. economy and where we find ourselves right now. So as I think Randy pointed out, the performance of the U.S. economy over the past year has really been quite strong. We had growth of more than 3% last year as rebounding supply supported both robust growth and in spending and also employment, alongside a considerable decline in inflation. The more recent data show solid growth and continued strength in the labor market, but also a lack of further progress so far this year on returning to our 2% inflation goal. So I'll say a little bit about our two mandate goals, maximum employment and price stability. As I mentioned, the labor market remains very strong. Payroll job gains have been strong over the first quarter, averaging just a tick above 275,000 per month. The unemployment rate has been below 4% for 26 consecutive months, which hasn't happened in more than a half a century, the longest streak of its kind. Strong demand for workers has been met by a substantial increase in the workforce due both to rising labor force participation and a substantial increase in immigration, as indeed Canada has experienced as well. So even with this strength, by many measures, our labor market has been moving into better balance over the past year. The ratio of job openings to unemployed workers was extremely elevated in 2021 and 22, has now moved back down to levels just above the pre-pandemic era. Surveys of workers and businesses indicate a normalizing labor market. So do the rates of both quits and hires. And broader wage pressures also continue to moderate, albeit gradually. So the overall picture for the labor market is one of real strength, but gradual normalization. Turning to price stability, our inflation mandate. Inflation, of course, declined quite significantly over the second half of last year, over the whole year, but particularly in the second half. But 12-month core PCE inflation, which is one of the most important things we look at, is estimated to have been little changed in March over February at 2.8%, and the 3- and 6-month measures of inflation are actually above that level. So we've said at the FOMC that we'll need greater confidence that inflation is moving sustainably toward 2% before it would be appropriate to ease policy. We took that cautious approach and sought that greater confidence so as not to overreact to the string of low inflation readings that we had in the second half of last year. The recent data have clearly not given us greater confidence and instead indicate that it's likely to take longer than expected to achieve that confidence. That said, we think policy is well positioned to handle the risks that we face. If higher inflation does persist, we can maintain the current level of restriction for as long as needed. At the same time, we have significant space to ease should the labor market unexpectedly weaken. Right now, given the strength of the labor market and progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and the evolving outlook guide us. Come what may, we remain strongly committed to returning inflation over time sustainably to 2%.
Dollars
Thank you. I think that's a really important frame for our discussion today. One of the things that I remarked on when I first got into public life was how often I saw my international peers as we moved around. And when I see the two of you on stage together, I know that often you see each other at G7, at G20 meetings. And I think it would be quite interesting for the audience to understand, how collaboration happens or doesn't happen internationally, how central banks work together or don't work together. So, maybe I could ask you, Jay, to give a perspective on how that happens from your vantage point.
Sure. So to give you an idea, we do meet quite regularly. So Tiff and I attend 2 G7 meetings per year for ministers, that's finance ministers, and central bank governors. We don't attend the leaders meeting, but we attend, in the United States, but we attend the meetings with the finance ministers, which Bill was, and also 2 G20 meetings. So that's 4 meetings per year right there. We also have 6 meetings at the Bank for International Settlements in Basel. One of those is now virtual, but we're and that's only central bankers, no finance ministries. So it's all central banking stuff. And, it's economics, it's financial regulation, all those things. We also come here to Washington, or every 3rd year we go someplace else twice a year for the IMF World Bank meetings, which is kind of what everybody's doing in Washington right now. So it's a lot of meetings. What do we do at these meetings? Fair question.
It's not a joke. It's not a joke.
The central bankers are having an ongoing conversation about what's going on in their own economies and their own financial markets, their own regulatory world with each other. And we're also talking about the big global issues of the day, as you would expect. So some of which are really the business of the elected government, not the business of the central bankers. But we have that discussion. It's more or less ongoing. We're seeing each other all the time. They're very informative, these discussions, and they really are, for me anyway, part of the way that I get to thinking about what the right policy is for the United States, is to hear what is going on around the world, what's happening globally, and how are people thinking about that. So it's very, very useful, particularly, though, given our close cultural, financial, and economic ties with Canada. Those discussions are especially fruitful and important, and I have regular conversations with Tiff. By the way, I do keep very close track of the actions of the Bank of Canada. I read Tiff's press conference transcripts carefully and pay close attention to that. Tiff did mention the similarities and differences. I'll say one more thing, which is we go to Basel, as I mentioned, 5 times a year. You're a long way from home.
Party.
We're there for 4 or 5 nights, and they're usually 1 or 2 nights off. So we go looking for someone to have dinner with, and very frequently we wind up with the Bank of Canada delegation who are really good and
that's
very
not funny
and,
either.
And a lot of fun together.
Oh my God!
So we have a very close relationship with the bank and great respect for that institution, as I'll have a little more to say about lately. One other thing I'll point out, though, about our relationship is we did do, as Randy pointed out, our first review of our monetary policy framework really ever. And we looked around. The Bank of Canada also does regularly, I think it's every 4 years. In any case, we really looked to the Canadian model and other models of how to do that. We talked to people at the Bank of Canada about how their regular framework review went. So we really benefited for that. So that's what I'll stop there.
Don't stop.
Tiff,
No, you're going to let them make bad jokes. Don't.
Yes, I mean, I'll just add a little bit on as Jay outlined, certainly from my perspective, one of the best parts about this job is we do, the international community, the central banking community, it's not like a commercial bank where you're competing against the other bank. We're all in this together. And if we get it right, we all help each other. There is a considerable openness. And, as Jay outlined, I think there's a few different functions. Yes, obviously, if you're in Canada, we have our own group at the Bank of Canada that analyzes the U.S. economy, forecasts the U.S. economy. It's very important to Canada. But, the Fed's group is a lot bigger. They got a lot more experience. Hearing what the Fed has to say is incredibly valuable for us. The other thing we do, though, is it's more than just the data and the forecasting.
Nope, it's just the data.
It's thinking through the scenarios together. What risks are on your mind, Jay? What do you think could go wrong? What are the scenarios? How would we handle it if this happened, if that happened? Being able to put your heads together and think through the risks, the scenarios, the strategy. There are also a number of really, I would say, sort of behind the scenes, very central banky technical issues that nobody really thinks about except central bankers. But what are the mechanics of QE? How do you exit from QT? How many settlement balances are we going to need to? Fortunately,
You're a QT.
they are critically important for the implementation of monetary policy and that sort of plumbing working of the financial system. And being able to talk to people who are thinking about these things as much as you are is hugely valuable. And then the last thing I will say is, there's some things that we're only going to succeed if we do together. The obvious one would be financial supervision and regulation. Our financial systems globally are highly integrated. We were deeply reminded of this in the global financial crisis. What happens in other countries affects all of us. And money flows across borders. So, we have to do that together or it's not going to work.
Well, maybe we can drill into that for a minute. Obviously, we recognize that most of your work is focused on the domestic markets. But in times of crisis, there's real challenge. As you mentioned, in the COVID period, the global financial crisis, that you were engaged with, Tiff, earlier in a different stage of your career. And for me, it was remarkable, the number of interactions with counterparts around the world during those crises. So maybe a question to both of you is, what kind of interaction happens during periods of crisis? What doesn't happen? Are there things that we should be thinking about differently in order to prepare ourselves for those challenging moments and making sure that the financial system is resilient? So again, maybe over to you, Jay, to react to that and hear your thoughts.
Sure. So, our economies, our financial markets, all of our institutions are deeply intertwined. And when there is a situation where there's serious stress, you need to get a global perspective. You need to get perspective around the world. And you have to do that very quickly. And we, of course, can move quickly and effectively on the domestic front. But the thing that you figure out in those times is that all the time you spent at Basel and at the G7 and G20 meetings, your colleagues, you know and trust and respect their judgment, and you don't have to go through that phase of gaining trust in people. You understand each other, you speak the same language, so there's a lot of communication. The level of communication is pretty high anyway, but during crises, it goes very high. I'm constantly talking to other central bankers around the world and also political leaders in our government and that sort of thing. So that happens a lot. The sense of what you're doing, again, is mostly sharing information and ideas about what to do. There may be a proposal that people are looking at and you're talking about that. So it's very useful. I say one thing to point out is it's less about coordination than it is about talking and understanding for one reason, or at least it was during the pandemic, and that was because almost every country's interest rates were very close to zero when the pandemic hit, and so there wasn't policy space for most economies, most central banks, to do a big coordinated rate cut. We did cut very quickly to zero, but I think we were higher than almost any other nation in terms of where our policy rate was. But anyway, there's a lot of communication, and those relationships that you built up really do help at that point. In terms of what you asked about learning, what have we learned? I think that the pandemic's going to teach a whole lot of lessons over time. I still think it's too early to say what they are with confidence, and I'll point out, look, the pandemic has surprised us over and over again, most recently in the United States, the remarkably strong performance of the economy at a time when virtually all economists were expecting a recession. So I think if you'd ask for the lessons of the pandemic a year and a half ago, you'd get a very different answer. Now, I think in a year or so, we'll have a lot more answers. It is a unique set of circumstances, and we're still learning, I think. But we will try to learn those lessons. Different point, I would say, about the bank stresses, another crisis, at least here in the States. I do think we can and have learned the lessons of the stress of early last spring. And I would point to a couple things that we embraced pretty forthrightly. One was that supervision was not tightly focused on the right things, was not proactive enough, was not forceful enough, and we've tried to take steps to remedy that. I also think there will be some regulatory initiatives for banks of that size and with those characteristics in time. So I do think those are lessons that we have learned.
And from a Canadian perspective, similar lessons or different ones?
Yes, I think there are similar lessons. Maybe I'll just give a couple of other examples. First, though, I will just underline, when a crisis hits, you're faced with a situation, you have to make decisions, and you have very limited information. The other reality is you have a pretty narrow window to act to be really effective. And for both those reasons, being able to speak, directly to Jay, to connect with our other colleagues, finding out what's happening in their jurisdiction, how are they thinking about it, what do they see as the options, it is hugely important in a crisis. And that it's a little more, though, than just information sharing. I mean, I think it helps us avoid unintended consequences of our actions. Sometimes you do something and it works for most parties, but not one party. And in a crisis, it's the weakest link that can take you down. So you've got to be careful. It also, I think, boosts confidence in the system. If we're acting in a way that is coherent together, it boosts confidence. It looks more like a plan than a haphazard policy response. Just to give you a couple of examples, I wasn't actually governor at the start of COVID. Jay was there. But certainly looking at it from the outside, the coordinated actions of major central banks to reopen fixed income markets, providing liquidity, providing market making of last resort in scale. It reopened core functioning markets. And by all doing it essentially at the same time and all working in scale, the whole global market restarted. If that had not happened, this crisis would have been a much deeper and more severe crisis. And then the other one I'll highlight is coping with the inflation as we came out of COVID. By all being resolute in our commitment to restoring price stability, by all matching our words with forceful action, raising rates.
We got $1,400 and permanent inflation.
And goods, which was really the first part of the inflation surge. Right. And it helped keep inflation expectations in all our countries better anchored. And I think it is a key ingredient in how we have all managed to get inflation down a long way back without causing recessions in our economies. And the last point I'll just highlight is something you said. Occasionally this coordination is very explicit. So for example, at the time of the global financial crisis, there was a coordinated G7 interest rate cut. I remember clearly because it happened at 3 o'clock in the morning in Canada, which was a little bit of a technical challenge. But most of the time, it's not explicit coordination, but it is those conversations. It is that shared information. We have similar objectives, similar goals, similar
boo,
tools.
TikTok, boo.
And we're sharing information, and that leads to a coordinated response.
Well, maybe you could spend a little bit more time on that from the Canada-US perspective. So Randy mentioned in his opening comments the idea that when you're in Canada, you're living next to an elephant. And I think a lot of Canadians would assume that that Canadian policy has to take into account U.S. policy. So maybe could you give us a perspective into how important that is for your deliberations and how that factors into decision making, the U.S. approach?
Well, look, I think it's pretty clear that our U.S. economic relationship is by far our most important relationship. Our economies are highly integrated. 35% of our GDP is exports, and 75% of that goes to the United States. So multiple, that's a big chunk of our GDP. Our financial markets are also very integrated. In fact, yesterday I was in New York, and when you go to New York, you are just reminded how integrated our markets are. I was at the New York Stock Exchange, and all over are cross-listed Canadian companies on many of the screens. Our financial systems are very integrated. Our banks have, most of our large banks have operations in the United States. Our pension funds are big investors in the United States. So we do spend a lot of time understanding what's going on, trying to understand what's going on in the United States and looking at the implications for Canada. There are, though, I highlighted in my opening remarks some differences. Another important difference I didn't focus on is, both our economies have big manufacturing sectors, big service sectors, large commodity sectors, but the commodity sector in the Canadian economy is quite a bit bigger than it is in the United States. Oil and gas, agriculture, forestry, mining, fishing. 40% of our exports, 13% of our GDP. And the commodity cycle can be quite different. And we have a flexible exchange rate that does help absorb the differences. And I think it's an important reason why historically sometimes our monetary policy do differ. Our cycles are often quite similar, and certainly through COVID we had a similar shock and a pretty similar cycle, and our monetary policy has been quite similar. There have been other episodes, though, where, particularly if the commodity cycle is different, you'll see monetary policy diverge somewhat from the United States. There are limits to how far it can diverge, but as I emphasized, we have our own currency, we have a flexible exchange rate, and that absorbs the differences to allow us to gear monetary policy to what we need to do in Canada.
And Jay, from your perspective, obviously the U.S. has an outsized role in the global economy, and I guess we'd be interested in understanding how much time do you deliberate on what your actions will have as reactions, and how much do you think about what's happening with global markets as you come to your conclusions?
So I'll start by saying that each central bank serves a domestic mandate, which is, in the case of Fed, is using our tools to achieve maximum employment and price stability for the benefit of the people we serve. So it's a domestic mandate. But in the case of the United States, we fully realize and appreciate that our decisions can have significant effects on, not just on Canada, or Mexico, but on countries around the world. And that's all the more so because the dollar is the principal reserve currency, which strengthens the transmission of our policy through the global economy. So we also know that that those effects on global demand from our policy changes can have an effect on the United States as well. That can rebound to the United States. So we're very, very aware of all of that. And for one thing, we try to be very transparent and predictable, given the flow of data and events. I mean, you have to move quickly sometimes, but we do realize we have a special obligation to be predictable and transparent, and that benefits us in doing that as well. So international spillovers, of course, are an important consideration. We do track that. Ultimately, though, we think over time, the most important thing we can do to support the global economy is to deliver on our mandate of price stability and maximum employment here in the United States.
And is that, have there been changes in this current cycle that have driven any differences? I mean, you've talked about the different drivers for inflation this go around from previous periods of inflation. So do you think about it differently as you approach these things?
Yeah, well, specifically on inflation, I do think this is different. This is not simply the more standard case of overheated demand, which has been the typical thing in the post-war era for the U.S. economy and other major Western economies. There are similarities and differences, and I would characterize it this way, that the inflation that arose suddenly really in the early part of 2021 as economies reopened resulted both from constrained supply and also elevated and rechanneled demand from services to goods. So if you remember, and you I'm sure will, there were unexpected widespread shortages and supply chain failures on a scale not seen in recent memory. In the U.S., several million people had left the labor force, creating a severe labor shortage that was more fully felt once the economy reopened, leading to a huge spike in wages, but also in the ratio of job openings to unemployed workers. So very unusual situation. Households had elevated levels of savings, and demand was very, very strong as well. So we thought, what's different is, have thought since we've understood the situation, that restoring price stability would require both the unwinding of the pandemic-related distortions to both supply and demand, as well as the effects of tight monetary policy on demand, which would give the supply side time and space to recover. And we think today that we're seeing those two things working together to bring that end about. And you saw that, I think, in 2023, which was really, in a large way, a supply side story. What happened was the supply side really recovered in 2023. We thought that it would recover in 2021, and in 2022, I was beginning to lose hope. And then in 2023, you saw the shortages and the issues with the trade pipelines not fully resolved, but largely resolved. You saw the U.S. labor force shortage alleviated by both higher participation among people who had dropped out of the workforce, but also from immigration. So that was the year of the supply side recovery. And you saw the core inflation rates drop by 2 full percentage points in the face of very strong growth. So that can only be explained by the enormous increase in potential output, the supply side increase over that year. So that's how I would say it's different this time.
And Tiff, maybe you can tell us how it's different in other ways in Canada. So we were talking about the similarities and the similar approaches to dealing with inflation and the
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 exact
positive
same
results.
thing.
But we've seen a divergence in Canada with respect to growth. So clearly there's some differences too. Maybe can you reflect for people what those differences look like and what the ramifications are for you?
Yeah, I will focus on the differences, although I will stress I think the main story is the similarities. And as Jay outlined, what is so unique about this whole cycle is that supply has played a much bigger role than we're used to. And from a monetary policy perspective, we don't have as good line of sight to supply as we do as demand, and we don't have any tools to influence supply. Our tools work on demand. In terms of what has been different, if you look at the Canadian economy, growth was essentially zero in the second half of last year. And what that meant was the economy, which was very overheated, supply caught up with demand. In fact, it more than caught up with demand. The economy moved into excess supply, and we're now seeing the effects of that in terms of relieving price pressure. So, why did demand slow more in Canada and the United States? I think that is a difficult question. I pointed to a couple of things in my opening remarks. I think productivity growth in the United States has been a lot stronger. You've gotten more supply than we have, so you've been able to grow more with less inflation or less inflationary pressure. And then the second thing is I think monetary policy is having more traction in Canada because the structure of our mortgage markets, half of mortgages have renewed in Canada. And even if your mortgage hasn't renewed, it's renewing in the next couple of years probably. So you're thinking ahead, thinking, oh, when it renews, I'm going to have to be paying a lot more on my mortgage every month, so maybe I should be saving more money now. So we're seeing that effect. We've had weaker consumption.
All right, this guy can chill for a sec, guys. Make sure you're smashing those like buttons, tapping the screen, subscribing. Join us at discord.gg/Tom Crown.
Household spending per capita, per family, has actually gone down. even though growth has not been negative overall. I think
Not been
moving
negative.
forward, we are actually seeing growth starting to pick up. The first quarter of this year looks pretty strong. We'll probably see some choppiness quarter to quarter, but overall we think that strength we're seeing in the first quarter will be sustained through the year, where we think on a quarterly basis growth is going to be averaging about 2% per quarter through this year. That's partly we're starting to see some pickup in consumption. Partly it is the resilience of the U.S. economy that is supporting our exports. They've been very resilient. And then coming back to inflation, I think those, broadly speaking, the path of inflation is pretty similar, but you are seeing, I think, some of those differences in the dynamics of the real economy in inflation. You know, our last few inflation readings have been reasonably good, even though total's still close to 3. Core has been, the last few times ticking down, and if you look at the more timely 3-month measures of core inflation, there is some downward momentum in underlying inflation, and I think that reflects the fact the economy is in excess supply, and that is relieving those price pressures. We're certainly looking for evidence that's going to be sustained. That's what we're looking for right now.
Well, I know that both of you realize that one of the key things we were trying to emphasize today was the importance of the Canada-U.S. relationship. And I also really appreciate all of the comments on the importance of trade to both of our economies, trade between our two countries, and foreign direct investment. And so while you're not trade policy experts, and I get that your organizations, that's not the focus, I really appreciate you giving us a little sense of, how do you think about trade in economic terms and
Long
the
or
importance
short.
of that, and how that factors into your economic outlook. And specifically, we're thinking about the importance of the agreement between the United States, Canada, and Mexico, and wondering how you think about that in terms of its impacts on trade in general, on labor markets, on supply. So maybe I could ask you, Jay, to give us any reflections that you might have on that and deliberations impacts.
So I guess I need to start by saying we don't do trade policy. We don't really comment on trade policy other than to say that it's clear that we have a mutually beneficial, large, substantial, ongoing, healthy trade relationship with Canada that we very much welcome. Maybe I'll add one more thing, which is I want to focus on a particular export of Canada that I think somehow we just desperately need here in the United States, and we can't get enough of it, and that is Canadian comedians and comic actors. I started to count the number of really great, funny people, and I limited myself to 10. So Jim Carrey, Martin Short, John Candy, Mike Myers, Norm Macdonald, Rick Moranis, Dan Aykroyd, Catherine O'Hara, and Andrea Martin, and I could go on. So something's going on up there. Americans love Canadian. If that's Canadian humor, we absolutely love it. So send more. We can't get enough of it.
That's a small but important part of our trading relationship, I guess.
Ha
Tiff, all jokes aside.
ha! So
comments
funny,
from your
jokes. Ha ha.
Yeah, well, first of all, as Jay underlined, we don't set trade policy, but let me just say, try to give you more of a picture. I mean, first of all, you just look at our two countries. The east-west border is the longest border in the world, and it's a long way across Canada. So it often makes a lot more sense to trade north-south than to trade across the country. And that's really, it comes down to geography in some sense. I mean, that's fundamental to the interties we have across our countries. Many Canadians are closer to fellow Americans than they are to fellow Canadians, just the nature of the geography. You look at what are the things that we buy and sell? Well, some of the biggest things, in Canada, we buy a lot of your consumer goods in the United States. We have a very two-way relationship on motor vehicles. You buy a lot of the motor vehicles we produce. We buy a lot of cars and trucks that you produce. Similarly, energy. We're both energy producers. It often makes more sense to trade the energy north-south than to ship it across the country. So we have a very dynamic two-way energy relationship. And you look forward and you think about how much electricity the world's going to need. I expect that relationship is only going to grow.
This much.
Another element that is growing quickly, and maybe that's partly comedians, is the fastest growing part of trade is trade and services.
Lost my headphones.
Now, if you want a haircut, you still have to do it in your own country, unless you want to go to New York to get a really fancy one. But but increasingly, a lot of services are highly tradable. The internet has completely changed how many things are delivered, and so you're seeing Canadians are increasingly importing a lot of commercial services from the United States. And then the final thing I'll say is on USMCA. Obviously, for both countries, the market access is key. The other thing I would underline, though, it's also the certainty about the market access. The certainty that American companies have that they'll have access to Canadian markets and Canadians will have access to American markets. That allows businesses to make investments, to deploy their risk capital, to commit to the future. And it's that certainty of access that is really key to building investment. I'll stop there. Thank you.
Thank you. Thank you, sir. Thank you.
Well, I'd like to thank both of you for taking some time with all of us. I think if we had looked back a couple of years ago and reflected.
I would like to thank that guy for no longer talking. Stay tuned in, guys. Keep smashing likes and subscribes. We're not
We
done.
would have been where we are today. We would have expected more challenges than we've faced. And I think we need to recognize that the stewardship that the Federal Reserve in the United States and the Bank of Canada in Canada have been responsible for has made an enormous difference in citizens' lives. I mean, we're in a situation that is virtually our best case scenario. So it's probably not often enough that on stage you're recognized for that important work. And I want to thank both of you for all that you're doing for all of us in making that the reality. And also I want to thank you for taking some time here. I mean, we are reflecting on the fact that in a couple of years, the U.S.-Mexico-Canadian trade agreement will be looked at again. And we want to reinforce the importance of working together, the importance of collaboration and cooperation, and really great trading relationships. So this is an important way for us to start this off, seeing the collegiality between the two of you, knowing how well people work together is really important for people. So thank you very much, and I know it's a busy week for you, so we appreciate also taking the time during this busy week. So thank you.
Thank you. You're welcome. Thank you. Riveting.
From the Canada Institute, I'm going to ask 𝐒𝐳 Delgado
To have a good day.
close off our
How
session
about it?
today.
Thank you, Bill. That concludes today's program, everybody. Thank you
That
all, everybody.
concludes today's program. I don't need you to thank him. Man, the sexual tension in that room is palpable. All-time high. That was something. That guy, really, he can speak. He can just roll and run on. What do you guys think? What are the takeaways? Are there any takeaways? See what our poll says. We have lots of votes. Check it out. 1,400 votes, 1,300 votes. The crowd has decided nothing burgers. I'll agree. We do have the FOMC on the 1st of May, so don't miss that. That will be a something burger. 29% Dove Pops, 22% Hawk Bites. I'm going to go with nothing burger. This was a great little Tuesday. What's up, Teach? Keep subscribing, fam. Let's get those numbers going. This has been a great Tuesday stream. We don't typically stream Tuesday. Usually Monday, Wednesday, Friday on YouTube at 1 p.m. East. But maybe we'll stream Thursday at 1 p.m. That way we'll just have the whole week. 5 in a row. Who knows? Subscribe over at youtube.com/TomCrown. Jump in our Discord, discord.gg/TomCrown. Also, check out our sponsor, Lux Algo. You'll get a 1-month free trial if you use my link or any of the links in the video description below. It helps support the channel. This was something. There were a lot of laughs, but there weren't a lot of jokes. Hopefully there'll be better jokes next time. That's all for today, fam. Join in the Discord. I'll be there chatting. We're hanging out. Maybe dishing out some TA. We'll see. Till next